Hey everyone, welcome back. Today, we're diving into a major update that could directly impact your wallet, no matter if you're working, retired, or just trying to stay afloat. President Trump's latest tax bill just took a surprising turn in the Senate, and what's inside might really shock you. It's not just about extending tax cuts. We're talking changes to Social Security taxes, healthcare rules, and even how much property tax you're allowed to deduct. So let's break it all down, quickly and clearly, so you know how this might affect your money. Small diamond first up. The 2017 tax cuts, remember those tax breaks that were supposed to expire soon? Well, they're sticking around. That means lower income tax rates are staying for now. Plus, the standard deduction is going up, meaning you'll get to keep more of your income before taxes even kick in. That's good news for many families. Small diamond, but here's the catch. The SALT deduction, if you live in a high-tax state like California or New York, watch out. The Senate wants to cap your state and local tax, SALT, deduction at just $10,000 again. That means homeowners could lose thousands in tax write-offs. If you're from a state with high property taxes, drop a yes in the comments. I want to know how many of you this could actually hit. Small diamond Medicaid. A big change now. Here's something unexpected. The Senate version includes even deeper cuts to Medicaid than the House bill. New work requirements could make it harder to stay covered, especially for lower-income families or caregivers of elderly parents. Rural hospitals are already warning they'll be hit hardest. So if you rely on Medicaid, these changes could affect you directly. Small diamond seniors. A bit of relief. There is a small win for seniors. The bill increases a deduction for those over 65, up to $6,000 per person. But here's the fine print. If your income is too high, that benefit shrinks. Small diamond Social Security tax breaks. Good news here. The Senate wants to reduce federal income taxes on a portion of your Social Security benefits, but only if your income is below a certain threshold. So no, Social Security isn't tax-free yet, but for many, this change means keeping a little more. Small diamond green energy credits stay. Unlike the House bill that wanted to scrap them, the Senate wants to extend green energy tax credits. If you live in a state seeing wind or solar projects, that could mean more jobs and local investment. Warning national debt concerns. Even with all these cuts and adjustments, the bill is expected to add $2.5 trillion to the national debt over the next decade. Some lawmakers say it helps families now. Others warn we're setting up future generations with a massive tab. What do you think? Smart trade-off, or risky move? Small diamond hidden gem. Tips, overtime and car loan deductions. If you work for tips or pull extra shifts, this is big. Certain tip and overtime income may be tax-free for the next few years, but you'll need to prove it with solid records. Also, car loan interest could become deductible again, up to $10,000. That's a break we haven't seen in years. If you're buying a car, that might mean real savings. Small diamond, what's next? The Senate bill still clashes with the House version. Negotiations are ongoing, and changes are happening daily behind closed doors. President Trump is counting on this bill to show he's prioritizing working families. But the final version? Still very much up in the air. Checkmark. Final thoughts. Bottom line. What this means for you depends on where you live, how much you earn, and whether you're working, retired, or on Medicaid. If any of this affects your life, talk to a tax professional. If you found this breakdown helpful, give it a thumbs up, subscribe for more updates, and share it with someone who needs to know. And let me know in the comments, do you think this bill helps you more or less than you expected? Thanks for watching, stay informed, stay smart, and I'll see you in the next one.